My name's Guy LePage. I'm a director of Conico. We're a nickel, cobalt, Scandium developer in Norseman in Western Australia, and I'm going to look forward to speaking to Matthew about our plans for this year.
Good man. Good to see it. I mean, you're a backyard man.
Indeed.
In Perth. So,
And obviously you've got the West Australian town to go with it.
very much. It's actually the Cape Town town.
Oh, okay.
So you can't take credit.
Similar.
I know. Hey, we had a good catch up online before Christmas. I actually came away from that. I quite enjoyed that conversation. There's an idea, and I want to talk about the idea.
Sure.
And where you're getting to, right? So, can we just talk about Greenland first?
Sure.
I presume that's kind of parked up for now, but does it have any value?
Well, I think we proved that the Tagita dike, the Mickey dike, the big dikes we're chasing are pregnant with PGs and copper. We just haven't found sort of economic grade. So I think we got to base one, but we didn't actually, get that spectacular hit we're looking for. So we'll probably review the data and make some decisions down the track. In respect to Mestersvig, which is the zinc lead target, we got some interesting hits. We didn't get the sort of widths and grades that we were looking for that the old Blyklippen mine had. But plenty of encouragement. But, again, we're probably going to review it, have a look at it and make a decision down the track. So, we could look at joint ventures, we could securitize it, we could go back in ourselves at some point. But look, overall, probably weren't the results we were hoping for. But, it's still alive.
Okay, so it's a case of kill or be killed.
Yeah.
But the question was, does it have any value? I think the market says no.
It doesn't. I don't think it has any value in the market at the moment. It might have some future value if we roll it out and try and move it ahead. It has some value, but in terms of market value, it's pretty limited at the moment.
Okay, so let's park that up. Okay, yeah. So you've assessed it, and you're not going to throw good money after bad there.
No, we're not going to spend another sort of 6 to 8 million there this year.
Right. Okay. So man thirsty, got all the right buzzwords there.
Yeah,
they're all the right commodities. Well, I say that most people don't actually know what Scandium is. Tell us a bit about Scandium.
Well, Scandium is it's not particularly well known. I mean, the world market's only 500 million. It's forecast to grow at just under 9% per annum for the next 7 years. Electronics, defence, it's an alloy. It's a rare earth. It's not widely known. Not a lot of production out of Australia. It's very limited. We first found Scandium this year, in fact. We're doing some multi-element testing, and we're finding grades of sort of 40, 50 grams a tonne. So that sort of got our interest back up and running. And when you look at the recoverable metal in Mount Thirsty, in the new sort of H-power high-pressure acid leach circuit we're looking at, that could be quite a big contributor.
Okay. Well, we'll talk about H-power another time.
Sure.
There's a big topic around that, right?
Yeah.
Okay, so say all the right kind of commodities, but let's kind of bring back to basics. So how much cash have you got today?
For under 500,000, so we're looking at having to do something fairly soon to run this year's program.
Right.
Yeah.
And obviously with share price doing what it did last year, look, everyone got hit last year.
Yeah.
Everyone gets a free pass on that one.
Yeah.
But still, you're going to be raising more expensive money this year. So how do you go about doing it? Where are you going to get it from?
Look, we'll probably go back to shareholders. That's the most likely thing. We've had a little shareholder group. We might try and bring some other parties in. Yeah. We're not looking at a big budget this year because we're only up for half the costs. But the objective would be to work the project up, do some more studies, and do some more studies on H-power, and then look at a spin-out third, fourth quarter this year.
Okay, and what's that conversation look like to existing shareholders? Because so far, if you go and say, look, so far I haven't quite got it right.
Yeah.
But that's the nature of the beast. If you're hunting for stuff, you don't always hit it out of
Yeah, look, I think we gave it a good crack in Greenland.
Yeah.
I think the problem I've always had with Mount Thirsty is we've been using this low cost atmospheric leach, which is not actually that low cost. It was still going to cost us, $300, $400 million to build a plant. Problem is we're leaving a lot of the metal behind. We're only recovering 20% of the nickel, 80% of the cobalt. And that's in a lab. In the field, it might actually be less. So I think with the revival of high pressure acid leach, particularly in Indonesia, which is now accounting for a lot of the world growth of nickel production, 20% increase in production out of Indonesia. A lot of that's, or most of that's driven by high pressure acid leach. So those plants are a little bit cheaper to build. They're operating more efficiently. They're ramping up faster. So I think the economics around HPAL are probably more attractive. And running the numbers over Mount Thirsty, I think we could have a pretty interesting project. And obviously we'll save that for the scoping study pre-fees. But I think that's the way forward for the project.
HPAL projects are super, super expensive, right? Like even if the news of Chinese technology was going to reduce those sort of 1 billion, 2 billion type numbers.
Yeah.
It's also got that kind of association with kind of, dirty nickel, I think some people frame it. But that kind of seems a long way from where you are today.
Well, I think
so. Why are we talking about that?
Well, I think HPAL, the thing is, it gives you the operating risks are lower, and it gives you more certainty with a product outcome. It's a known technology. It is more expensive, but if you look at the returns over life of mine, they're significantly higher, all the ones that we run anyway. So I think there's a lot of perception around HPAL plants being, high capex, high risk, poor operating history, and that's true. But the last sort of 10, 12 years up in Indonesia has proven these things can actually work and work efficiently. In terms of cost, well, they are, we're talking capex for Mount Thirsty, probably somewhere in that $1 to $1.4 billion range, but the payback could be quite short given the high price of nickel.
Right.
And when our nickel recoveries, if we can get them from 20 to 90%, cobalt to 85 to 90, that'll make an enormous difference.
Like, come back to the question, which was that, and those sorts of numbers seem so far away from where you are today. So remind me of the business model that you're hoping to deploy here with Mount Thirsty to be even have those sorts of conversations.
Sure. Well, I think the first step's really got to be a scoping study to demonstrate to the market, look, even at a high level, this could work. The next phase would be to push ahead with a pre-feasibility study later this year, or roll into a pre-feasibility study. And that's not going to be super expensive.
Why?
Because we've already done all the test work before. We've done the mine planning. We'll probably go and do some more drilling on the resource.
Right. So what have you got? What data do people need to
Well, we've got a JORC resource of 30 million tonnes.
Okay.
We've done a PFS already on atmospheric leach. So a lot of that work can be replicated or used again in a PFS for HPAL. So I think you're going to joke there, mate.
No, I'm not checking your numbers and sneezing.
Well, some people do. Okay. So I think a lot of that, it's not going to be super expensive to do a PFS. If we can do that, roll it into with Greenstone Resources interest in a spin out, complete a PFS. I think we then have a study that we can get a partner in. Okay. So that's probably middle of next year, hopefully, that we could look at finishing a PFS with an HPAL circuit. That's my sort of.
So is your idea to just kind of, you don't want to kind of give away the upside, right? So getting partners in, that's going to be up for negotiation.
Yeah.
You're not in a strong position financially.
No.
So you need to sort something out.
It's a cut, yeah. So I think the spin out will come with a decent sized capital raise to fund the PFS. I mean, the sort of model you're looking at, bring your partner is, you're looking to retain somewhere between 30 and 50% of the project into a production scenario at production. So that's, if you look at a lot of the deals that have been done around WA, for a sort of $1 billion plus capex, that's realistic. You might be more around the 30 to 40% mark. So that's a sort of
so 34% for what? The
interest in the project at production. So getting a partner in to fund the capital costs and take you into production. Obviously there's a dilution factor there. Yeah. We're not looking to operate a project like that. We don't have the resources or the team to do it.
Yeah.
But I'm confident if the numbers stack up, we can attract that partner.
So when you talk about spin out, so how, what does that
Probably
look like?
a new listing of Meteor Metals, which holds the asset, which Greenstone have a 50% interest in.
Right.
So we'd look at doing a new IPO.
Right. And, so, and Greenstone themselves, to fund a lot of these things. They're probably not big enough to.
No, they're like those. I mean, they've got their focus on gold, so they'll look at rolling their interest in with ours and then doing a new listing on the ASX.
But they would stay within the new setup.
Yes. So they'll be a 50% partner before obviously new shares are issued to new investors.
Okay. So they'll still be around in the mix.
Yeah.
So that leaves Conico with what?
Well, it'd more than likely do a distribution in specie.
Yeah.
So it'd probably leave us with Greenland. So, at that point we might revisit Greenland or be looking for other projects.
Okay. So let's kind of wrap up on the kind of thirsty things.
Yeah.
Okay. Spinner, Greenstone stay involved. Great.
Yeah.
You'll raise some capital at that point in time.
Yes.
Do you envisage just management teams, being involved with that one, or will that be down to who you bring in?
I think we'd probably look at reconfiguring the management team.
Right.
We've been at it for 16 years.
Yeah.
And that's probably a little bit too long for where we've got to.
Okay.
So we'd look at populating a new board and management team.
Right. Okay. That makes sense. Because I think these legacy issues, when they roll on and roll on, that you can't get rid of the kind of what people perceive it as, right?
Yeah. It's a bit like some of these old rock and roll bands.
Exactly. Just leave it, mate.
Yeah, that's right. They were good in the 60s, not so good today.
Yeah, okay. So that's fine. And you're sort of, again, time frame, you did say, but what?
Somewhere between September and December that we'd look at having this spin out completed.
Okay. You've also got a bit of work to do between now and then in terms of just filling in some gaps.
Yes.
$500,000. So when would the raise be?
Well, I think that's you look at the numbers, look at the quarterly, that's imminent. So we look to complete that and then try and complete that scoping study sort of July, August.
Right. But you want to raise as little as possible.
It's not a significant raise because we're only up for half of it, and it's only a scoping study.
Yeah.
But, it would leave us with a reasonable amount of cash at the time of the spin out.
Right.
So, that's the sort of next 6 to 9 months.
So people see that you go, look, it's going to be a bit expensive in the short term, boys and girls, but when this spin out happens, say Q4, we're aiming for, no guarantees, there'll be gains there at that point. So bear with. Yeah. Okay.
Basically, that's it. I mean, if we can add some value through the scoping study and show this is as $1 billion NPV, I think it's going to be worth more than our cap of 13-14 million at the moment.
You'd think, but no guarantees again.
No guarantees. I mean, there still is a bit of skepticism on HPAL and the high capital costs.
Yeah.
And the capital costs, you can source cheap plant equipment and you can get it fabricated offshore, but only a third of capital costs are plant equipment. The rest is all labour, civil engineering. So it's not going to be a cheap build, but overall the economics, I think, could look pretty robust.
And you'll find necessary partners to do that because it can be complicated. Right?
Yeah.
And China, Philippines, Indonesia, well known for outside. There's one in Brazil I'm aware of, and maybe only a couple of others with Glencore, etc. But because it's not so popular ex-China. Okay, you'll let us know.
Yeah, and I think the other thing, I mean, people are going on about ESG, but it is a source of cobalt from a first world country. Yeah, it's only a few hundred kilometres from a port, so that does have some appeal from a longer term security of supply.
What's the percentage in terms of value of the cobalt?
Under the HPAL, it's probably going to account for about 30% of the revenue.
Okay.
But it's a high cobalt grade. It's 0.12 cobalt. The nickel revenue under the HPAL scenario will be higher than the cobalt.
And as you improve recoveries, even more.
Yeah. So I think I'm reasonably confident with current metal prices, the economics are going to look pretty good.
How much work do you think you need to do in terms of the metallurgy recovery component before you do the spin out? Because if that happens after spin out, then obviously Nuco sees all the gain.
That's right. Yeah.
So again, that's a cost exercise.
Yeah. It's not it's not a big spend. We may spend as a joint venture $1 million between us between now and September.
Okay.
Maybe 1.5. It's not a big spend. We have done some HPAL test work previously, It is only a scoping study, so it's only sort of plus or minus 50% certainty. But some of that network will be better quality than that.
And are there any kind of groups that you kind of would go to now? In Canada, where like Matt Sock and Boyd, the big boys go to solve problems like this. In Australia, is the skill set necessary?
Well, there is. And it's not a criticism, it's just a fact. A lot of the HPAL expertise here is a bit old because, Maribyrnong was built in the 90s. Ravensthorpe was 2000s.
Yeah.
There are some groups here that we are going to be using have current knowledge of HPAL. In particular, some of the projects been ramping up in Indonesia. So we do have more current engineering expertise in Perth on HPAL that gives me a bit more confidence that we're going to be well looked after on that front.
And then, because it doesn't necessarily mean that if they go from 20 to 40%, you should expect a 100% uplift in how people value that. But what do you think what should a target be in terms of the recovery of the nickel component?
Well, if you're going to be spending that sort of money, you really want to be sort of 90%.
Right.
In the 90s, low 90s on nickel, 85 plus on cobalt.
Right.
That's where you need to land.
Right. So we're ways off of that.
No, I think some of the previous HPAL work we did, we were getting in that range.
Right. Okay.
And the HPAL, the good thing about high pressure acid leach, you're smashing at 800 degrees Celsius high pressure, it is going to blast everything. So that's the benefit of HPAL. I think the only criticism I'd have of our previous work is the atmospheric leach hasn't been deployed widely in the world. So there is a question mark on, even if it did work, could you fund it? And in an operating environment, would you get those results? Whereas there is a lot more data out there on HPAL.
Yeah, it's kind of interesting. We saw a couple of companies last year who had assets in their portfolio, zero value attributed, spin that to new co, all of a sudden the thing's worth 50, 100.
Yeah.
It's that kind of release of value. Yeah. And that's good for your current shareholders because obviously you will
that's right.
Etc.
That's right.
Makes sense. So we'll see how you deal with that and the raise, imminent raise, how you do the spin out, the data you accumulate between now and then.
Yeah.
Right. Conico though, you need something needs to happen. It's a kick in the ass type attitude.
Well, I think I got one in the stairs going up.
Did you?
Around a happy shareholder.
Did you? Okay. I'm not going to delve into that one. You're going to need to find something to work on because I think Greenland possibly, based on the same thing, we talked about, if you've got a management team been out at 16 years, perhaps it's time to. Greenland, likewise, it's had a go at it. Okay results, but not economically stunning. I don't think the market will give you much credit for having another crack at that. So. Where would you look? What commodities are we looking at? You must have talked about it internally.
Well, I prefer the LME, LME quota of the precious metals. I think once you into the tungstens, I've found that sort of market hard, vanadium, silica sands. There's lots of different, I suppose lithium is looking at becoming quoted on the LME, so that's probably been elevated. Look, there's lots of opportunity out there. We'll just have to assess it, but it's like all these things. You want something on the right end of the grade tonnage curve to make it work.
Yeah, and no rush. You've got stuff to do.
Yeah, and look, at the end of the day, come the end of the year, we'll be either looking to do something on Greenland, whether that's a JV or sell it, and looking for another project.
So you might get a little bit of revenue there, but that's kind of going to be spent on the Mount Thirsty project and spin-outs, etc. But so you're not in any. I want to say you're not in any. So you've got to find something.
Yeah.
Your precious metal seems to be you're favouring that because it's something people understand.
Yeah.
And jurisdiction.
Well, I'm sort of agnostic. Some jurisdictions that have been a bit more challenging lately.
Yeah, that's for sure.
But, Australia's done really well in Africa, despite all the coups and rebel activity and all sorts of problems there. I'm not averse to going to some spicy jurisdictions. We just have to see what the assets are like.
Okay, well, stay in touch.
All right. Thanks, Matthew.
Appreciate it.
Great.